Onto your market news now. Asian markets trended lower on Friday. It follows an apparent rally in U.S. market session, which quickly dissipated last night. So many unknowns around the coronavirus and its economic impact continue to weigh heavily on investor sentiment. In Japan, the Nikkei share average ended down 0.86%. Hong Kong stocks were also under pressure, with the Hang Seng Index losing 0.6% on the day. Mainland China got hit a bit harder, the Shanghai Composite Index declining by 1.06%. Over in the United States, markets started the trading day on a positive roll, but then the economy continued to be of concern, with over 26 million people now having said to have drawn unemployment benefit in the United States over the past 5 weeks. The Dow Jones Industrial Average ended up 0.17%, let's call it 0.2%. The S&P 500 ended more or less flat, down 0.05%, while the tech-heavy Nasdaq was also flattish, down 0.01%. Well, the local equities market is following the trend of Asian markets earlier, trading firmly in the red. With the coronavirus currently dictating the global agenda, uncertainty remains the order of the day. Retailers like Clicks, the Foschini Group and Mr Price were particularly under pressure. The clothing retail sector is likely to be reeling, given that it's not one of the sectors permitted to operate come May the 1st, even as lockdown restrictions are eased. And in other news, it turns out that the Land Bank has defaulted on a 50 billion rand loan. We'll find out what the implications of that are. But first, let's take a look at the indicators. Well, for more on the markets, I'm joined via Skype by Warwick Lucas. He's the Chief Investment Officer at Galileo Capital. Thanks very much for joining us, Warwick. So sentiment really does seem to be quite fragile, and I suppose this is going to be pretty much the thing for 2020.
Yes, very much so, Nampu. I mean, it's still very much a case of there are many things that we don't know about the coronavirus. At this stage, vaccines are very theoretical and a long way away. The range of what we actually know is still very much evolving. So there's a lot of uncertainty with it. We saw, for example, a preliminary release from China, an inadvertent leak suggesting that Gilead's remdesivir drug may not be as effective as previously hoped. And at this stage, even that leak is not necessarily all in. I mean, it's not a formal report. It's not peer reviewed. And in any cases, there is further to run on it. But of course, this adds to uncertainty, and markets hate uncertainty.
Yeah, indeed. Yeah, I was going to say, I saw that in terms of that company that you're talking about, that it had a massive loss on the stock market last night as a result. But just moving on swiftly, let's talk about the Land Bank. We did hear that the Land Bank has basically defaulted on a 50 billion rand loan. What does this basically mean? What happens next? Because presumably government has guaranteed this debt and will be expected to step in.
Okay, so I think we need to clarify what it actually is that they have defaulted on. The first thing that they have defaulted on is expressly payments on revolving credit facilities of approximately 700 million rand between now and I think it is the end of May. I think it's also important to point out that the 50 billion figure comes from the approximate size of the bond book issued by the Land Bank. Now, the actual quality of the loans from the land bank, i.e., it on lends to farmers, that's approximately 7 billion worth of loans. It lends to lending intermediaries, in other words, businesses that then on lend to farmers, that's about 26 billion. And it also lends to corporates in the agricultural space of about another 10 billion. It's a reasonable quality book, and more importantly, it's a particularly large proportion of the whole agricultural sector, about 28%. So it's an important cog in that wheel. Now, I mean, it's already been downgraded. It was downgraded in the middle of Feb, and that was because the land bank did have some quite weak results. It had a rise in non-performing loans, and there's also been some seasonal issues in agriculture, i.e. seasons are often not consistent in terms of when harvesting happens and so on, and that's just part of the cocktail. It's quite conceivable that part of the issue has related to the whole national downgrade and caused a covenant breach. So it's not necessarily and shouldn't be interpreted that the land bank is a problem business in itself. But when the environment turns sour, and, for example, you have a downgrade in the national rating, it may very well take a loan that was considered performing by a bank and turn it to a loan that cannot be rolled and therefore must be repaid. And that is the kind of issue I think that the land bank is probably finding itself in. Will this business be able to refinance itself? I think yes, because of the quality of that book that I referred to. So I think it just goes to show, though, that with something like downgrade, there are many unintended consequences. And this is one example of it, and why downgrade was so unfortunate. And well, at least we've seen that government has been able to issue other guarantees, and I think that the land bank will fall in the range of institutions that will receive guarantees as well. So please remember, it's not the full 50 billion that has to be guaranteed. It's really a case that existing cash flow pressures need to be ameliorated and dealt with. I mean, for the rest, it's lending to agriculture. Agriculture is still functioning. It's going to have a big harvest, and it's feeding all of us while we're stuck under lockdown. So it is basically viable.
Yeah, thanks very much for that clarification, Warwick, indeed. And then lastly, before I let you go, of course, the president came out with the announcement of easing the lockdown come May the 1st. But of course, one of the victims will be the retail sector. We're understanding that they're under a lot of pressure today because they won't be able to open up. That is particularly your clothing retailers. What's the destiny for them, given what's happening right now?
Okay, so I think the first thing to consider with the clothing retailers, they are level 3, which means things need to get a little bit better, or we need to have the economy freed up. And at this stage, we have no guidance as to what is or what the rate of extracting ourselves from downgrade will be. Now, in terms of the clothing retailers, I mean, there's two legs. They've basically had a change of season coming through, and they haven't had from the middle of March till now to basically clear out the end of their summer lines. And of course, the other issue is, when do they start selling their winter ranges? So one, they've been stuck with a bit of dead stock. That's not necessarily the worst of it. The key issue then is, in coming into the winter season, what can they actually start selling, and when can they start selling it? Will consumers actually have money to spend on winter clothes, or do they say, sorry, we just make we make what we've got just last that little bit longer? And then I think is going to be the real hard yard for the clothing retailers, that consumer pockets are going to be distinctly emptier this time this year than it was last year.
Yeah, no, very tough indeed. Thank you very much, Warwick, for your insights. As always, Warwick Lucas, he's the Chief Investment Officer at Galileo Capital. After a short break,